Right, on Saturday, Bitcoin hit another all-time high of 99,500 US dollars. This is not the most updated chart. Though it has since retraced slightly, experts believe that $100,000 is not a matter of if but when. Especially since Trump's victory in November, Bitcoin has strengthened by almost 44%. Now, on a year-to-date basis, Bitcoin is up by 135%. And it's just shocking how much just this magic internet money is worth right now. Yeah, one BTC can buy you 10 premium Proton Sagas or one BMW 6 Series, 73 iPhone 16 Pro Maxes, or one brand new apartment. The Trump administration is very positive towards crypto. Yeah, he said that he will include more supportive regulation as well as a national strategic Bitcoin reserve / stockpile if he were to win the election. Now, the question is whether he will follow through or not, but so far investors are very optimistic, which is why you see a lot of buy volume in Bitcoin. And crypto markets in general, right? It has gained approximately $900 billion since Trump's win. And not to mention, there are quite a few new ETFs. BlackRock, one of the world's largest asset managers, introduced a Bitcoin ETF options. This one obviously has opened the floodgates for more investors to invest in this particular asset. And not to mention, gold has also rebounded, now setting its sights on $3,000 an ounce. Now, previously, if you were here during our session on 10th November, I did mention that gold will retrace slightly due to Trump's victory. Yeah, he previously promised to quote-unquote end the war before his inauguration on 6th January. Well, it seems like this retracement is quite short-lived. I sort of expected it to continue to retrace at least till the end of the year, but gold quickly rebounded and is now currently at $2,700 an ounce, up by 30% on a year-to-date basis, and mainly is due to the Federal Reserve's interest rate cuts. Now, to keep things simple, when the US Federal Reserve cuts interest rates, borrowing becomes cheaper and more money will flow into the economy. And combined with Donald Trump's policies, he is known to favor inflation, more growth, right? Then you will understand that scarce assets such as Bitcoin, gold, precious metals, they will continue to outperform. And in fact, Goldman Sachs, they've laid out a prediction saying that $3,000 an ounce for gold is quite a realistic prediction by 2025. Now, apart from these reasons, right, gold is also rallying due to heavy central bank buying. Central banks, they are trying to reduce their reliance on the US dollar, as well as there are some fears of financial sanctions. In 2022, when Putin ordered his troops to invade Ukraine, the US taught Russia a valuable lesson. The US and its allies froze over $300 billion in reserves from Russia, effectively locking out Russia from its own emergency funds. That's one of the main reasons why global central banks right now, they are aggressively buying up gold. If you take a look at China, they have been one of the biggest buyers of gold. Since the third quarter of 2022, they have increased their gold reserves by almost 16% to 2,223 tons. So in kilogram terms, it's about 2.23 million kilograms. So if you have ever seen those 1 kg gold bars, yeah, China holds 2.23 million of those stored in their vaults, worth 214 billion US dollars. So apart from China, India is also buying up gold, France, Singapore, Russia. These are just the notable countries that are all trying to buy up gold supply, which is really driving up gold prices. In fact, if you take a look at this chart over here, right, the third quarter of 2022, and then you compare it to the chart of gold, right, gold didn't really start to rally until 2023, and that is obviously due to global central banks aggressively buying up gold. Now we reach to the ultimate question whether it's too late to invest or not. Well, you shouldn't ask yourself this question. Rather, you should ask yourself whether you are underexposed or overexposed. Now, I've said this multiple times already. Every once in a few months, I will keep repeating myself, but I don't mind repeating myself again. And the key is to, at first, fix a target allocation in each particular asset within your portfolio. Yeah, let's say you currently have 10,000 ringgit, you invested 10,000 ringgit, right? And your goal is to have 10% in gold and 5% in Bitcoin. So maximum amount that you can invest in gold is 1,000 ringgit and 500 ringgit in Bitcoin. But currently you have 0%. The key is to always get off 0%. So if you're not invested right now, your plan is to invest 5% or 10% or even 20%. As soon as possible, you should get exposed to the market. You don't have to immediately fill in that 10%. You can enter maybe 2, 3, 4, or even 5%. Then see where the market moves going forward. Right? If gold continues to go up, Bitcoin continues to outperform, hits 100K or even 110K, then that's good for you, right? You didn't miss the train. At least you got your exposure already. But conversely, if let's say gold retraces or Bitcoin maybe retraces back down to $80,000, then you can see now you are underexposed. Yeah, previously you entered about 5% and now your exposure has reduced down to about 3 or 4%. That is a signal for you to allocate even more or quote unquote buy the dip. And this strategy effectively removes the need for you to time the market. You don't even have to look at whether it's too late or too early to buy right now. You just ask yourself the question whether you are overexposed or underexposed. Obviously, if you are overexposed, let's say your goal is to have 10% and now gold has rallied to a limit where within your portfolio is like 15 or 20% already, then you shouldn't forget to rebalance a little. Okay? Don't forget to take profits before you regret. So let me move on over to the ringgit. Yeah, the ringgit, the performance hasn't been stellar recently. Yeah, after rallying to 4.0940, it immediately reversed course and currently has lost about 8 to 10% against the US dollar in the past 2 to 3 months. And one of the main reasons for this is because of dollar strength. Because if we compare the dollar index versus the USD MYR pair, the answer becomes quite clear. The dollar has recently been rallying. After Trump's administration since November, dollar has gained about 3 to 4%, which led to a similar movement in the USD MYR pair. Yeah, and the main reason for this ringgit weakness slash dollar strength is because Trump plans to unleash nearly 40% tariffs on all imports from China in the early 2025 as soon as he goes into office. This will potentially slice China's growth by up to 1%, and any blow to the Chinese economy will be detrimental to ASEAN countries that trade heavily with China, which is pretty much the entirety of Asia because who doesn't trade with China these days, right? Malaysia will definitely be in the crossfire because our exports amounted to 48 billion US dollars in 2022. We have a partner share of about almost 14%. So if the Chinese economy underperforms, you do expect the Malaysian economy to follow suit as well. There is an estimate by the World Bank saying that a 1% slowdown in the Chinese GDP will translate to a 0.8% decline for Malaysia. So it makes sense if like the Chinese yuan is weakening against the US dollar, the Malaysian ringgit will also weaken against the US dollar. And right now, what the ringgit is seeing, unfortunately, is sort of like a double whammy. We have to deal with dollar strength and also we have to deal with a yuan weakness, right? Which is why we see such a heavy reversal towards the trend of the USD MYR pair. So another reason, well, foreign investors, they have been selling a lot of Malaysian equities. They're taking profits, possibly exiting the Malaysian market entirely. Their fourth consecutive week of doing so, which last week totaled 260 million ringgit. And in November itself, they've net sold a combined total of 720 million ringgit. And this makes sense when we relate it to the strength of the USD MYR pair because if you're a foreign investor, you sell Malaysian stocks, you convert it back to your own foreign currency, obviously that's going to lead to more selling pressure towards the ringgit, hence the weakness that we are currently seeing right now. Okay, so year-end wise, where are we going? Where is the ringgit going to end the year? So MIDF in September, they laid out a bold prediction saying that the ringgit will hit 4.03. Now, I think right now at this current level, it is quite unrealistic because the ringgit has to rally almost 26%. But in that time, when MIDF published their report in September, they were actually somewhat accurate. That was when the US dollar fell to 4.0940, somewhere at this point over here. Obviously, they didn't account for Trump's victory. So after Trump's victory, Hong Leong Investment Bank, they published a new report saying that, oh, ringgit will likely weaken further to 4.50. I think this is a more realistic target. So the Malaysian stock market, I've talked about it just now, FBMKLCI, because of foreign investors selling in November itself, it actually gave up a lot of its gains. In fact, in the past 2 to 3 months itself, mainly because of foreign net selling, the FBMKLCI has lost the majority of the gains made earlier during the year. Yeah, but despite this, the index is still up almost 10% since January. Shinji, do you have advice? Ooh, advice is a sensitive word. On degening to mid-cap slash low-cap crypto slash meme coins in anticipation of a crypto bull run. So I wouldn't say advice, but what I won't do personally is FOMO into all of these small cap coins. Yeah, because if you look at the trends of the entire crypto industry, right, a lot of these meme coins that were rallying in 2017, 2018, or even 2022, 2021, right? Right now, they don't really exist anymore. Right now, as the crypto market rallies, right, the majority of these coins, they're not really following up. So putting a lot of your money into these small caps is sort of like gambling lah. Okay, so you got to be very careful. And if you look at the stock market itself, when you invest in tech stocks, it's already considered high risk, right? And if you invest in those small cap tech stocks, you're not entirely sure if this company will still exist or not. That's similar when it comes to a mid slash small cap altcoins. So be careful if you're trying to play with those. What I do is I tend to allocate 1 to 2% of my portfolio just for me to play. Okay, if you are wanting to bet, if you want to try and time the market, see whether you sell the top and buy the bottom, right? Rather than playing with your entire portfolio, okay, which is definitely not a good strategy, right? Why not you just allocate like 1 to 2%, maybe 100, 200, or if your portfolio size is big, 1,000 to 2,000 ringgit, and you can do whatever you want with it in the market, right? You can use it to play futures, you can use it to invest in small cap altcoins or whatsoever. So in case that the market turns to a negative and all these altcoins go bust, at least it doesn't really impact you. Yeah, it's only 1 to 2% of your entire portfolio. Yeah, meanwhile, the remaining 97 to 98%, you invest properly, right? You invest based on fundamentals and you understand what your target exposure is. Right? I think you mentioned bosses and you also mentioned whether it is a top signal right now or not. Well, if your strategy is you're planning to trade the markets, you're planning to time the markets, you want to like buy as low as possible, sell as high as possible, right? Then definitely my approach will not be for you. Hans' approach will also not be for you. But if you are planning to invest long term, 20 to 30 years, right? Whether you buy Bitcoin at $50,000 or $100,000, it doesn't really make a difference, if Bitcoin goes to $1 million by 20 or 30 years, right? The key is to always get your exposure above 0%. Yeah, I totally understand. If you're looking at the markets right now, a lot of people are looking at the markets, have been DMing us also asking, oh man, it's so late, man. Why not I just invest right here? Why not invest just before Trump gets the win? Oh, should I invest right now? Right now or not? And I always tell them the same answer. Take a look at what your portfolio requires. If you're not allocated right now, the key is to just allocate a bit and then see where the market goes. Okay, if it goes up, good, you already got your exposure. If it goes down, then that's a signal for you to allocate more. And also another thing, right? For those people who've invested in Bitcoin since like, I don't know, 2017, 2020, and are looking at their portfolio right now, it's about 70 to 80% Bitcoin. You've made so much profits already. Well, that is a signal for you to rebalance a little, right? Because you don't want to be too exposed to any particular asset. You want to be well diversified. Okay, so that is the strategy that I'm doing right now, and so far it has worked out quite well for me. At least I can sleep every night. Okay, so next question, what coin should we invest in? I won't put it as advice, okay, but I put it into a perspective. What I'm mainly investing in right now, the majority of it is in Bitcoin. Okay, if you're a gatherer, you're a Patreon, right? Which let's see, these 40 plus members know. Every week I update my portfolio, and within there, they can see that I invest the most, and the majority of it is in Bitcoin. Safe to say about 70 to 80% compared to all of the other altcoins, Ethereum, Solana, all these other things only comprises about 1 to 2% of my entire crypto portfolio. So if you're a beginner, you don't know what coin to buy, and you want to start investing in the crypto market, right? Possibly you can download a regulated digital asset app. Okay, there's Luno, there's Synergy, there's Tokenize. Obviously, Luno is the most well known, right? And you start with the one that has the longest track record. Yeah, the one that will most likely not topple one. Yeah, and that one is obviously Bitcoin. Okay. Can we see again an example of the portfolio allocation? How many percent of gold, ETF, industry A, industry B, etc.? Yeah, good question. I think I wrote about this previously. Anyway, I don't want to waste your time. If I do find it, send it to the general chat later, and you guys can have a look at the article. So Shinji, it's not 0% investment. Investment is there already. Gold, KLCI stocks, but market price is overpriced right now for gold blue chip stocks. Should continue DCA or stop investment for a moment to wait for a dip? Okay, so right now, what Han is trying to say, I frequently talk to Han, is that, well, if you're looking at the market right now, it's obviously oversold. I mean, overbought, sorry. Right? There's a lot of greed in the markets. And then you look at the fear and greed index for crypto, it's swinging way to the greed side, right? So rather than changing your entire investment strategy, you just allocate like a small portion of it, you put it in cash. And you wait first. Yeah, if you want to try and time the market, like, you put in cash, maybe 5 to 10%. And then the rest of it, you continue your regular plan, which is you follow your target allocation. If you've been regularly dollar cost averaging, right, in Bitcoin in the past 1 or 2 years, then it's been great for you, right? Because you've been DCAing since what? Bitcoin is $50,000. You have been buying Bitcoin since here. So that's sort of like a good strategy for you. Why not just continue that, right? But at the same time, if you're afraid that the market is approaching its top, maybe you look at your portfolio, you're overexposed in Bitcoin right now, probably time to rebalance a little, rebalance it to cash or whatnot, to whatever asset that is weakest within your portfolio right now. And if you are allocated in a lot of aggressive investments, yeah, let's say tech stocks, yeah, Bitcoin, crypto, etc., right? Then considering the S&P's performance plus gold's performance plus Bitcoin's performance, definitely your portfolio will be overweighted in high risk assets. And that is the opportunity for you to rebalance to lower risk assets, which typically means cash lah. Hi, sorry, I missed what is overexposed, underexposed at your previous stock. What does it mean? Yeah, the first step in financial planning is to understand your risk profile. Okay, and to understand that, you must ask yourself, what is your goal when investing? Whether it's for retirement, whether it's saving for a down payment for a car, whether it's saving for your wedding, each of these are separate goals. You can't just lump it together in one portfolio and tell yourself that I'm investing for the sake of investing. Well, then you'll be pretty lost lah, because you're not really clear on what this portfolio is for. Okay, so you're investing for your retirement, that's one portfolio. You're investing for your wedding, that's another portfolio. Because at the end of the day, these two portfolios have different time frames. Yeah, your wedding, let's say you're planning to get married in the next 5 years. But when you're investing for retirement, you're investing for 20 to 30 years. In this case, you can see that your wedding portfolio has to be much lower risk compared to your retirement portfolio. Right? So now there's two separate portfolios already. And we are talking about the retirement portfolio. When it comes to retirement portfolio, right, as much as possible, you want to maximize your risk so that you can maximize your returns. And in this case, one of the ways to maximize your returns is by investing in growth assets such as tech stocks, the S&P index. Bitcoin is also one of them. You've seen how Bitcoin has rallied in the past year itself. I've even talked about it just now, right? So now when it comes to overexposed and underexposed, right, once you got your goals clear already, you start to ask yourself what sort of assets that you want to invest in. And then you fix a specific percentage for each asset. I'll give you an example. Let's say 20% I put in US stocks, 20% I put in the Malaysian bank stocks, 10% I put in Bitcoin, 5% I put in gold. These are just initial targets that I tell myself. 15% EPF. Don't forget to factor in your EPF also, because if you're investing for retirement, EPF will also play a major role for your retirement, right? If you take out your EPF from your retirement portfolio, now you see your entire portfolio will be much more conservative. Yeah, because you have to create another section called the low risk section when EPF is already doing the work for you. Okay, so you put in your EPF as well, maybe 15 to 20%. Then maybe you put like another 5 to 10% in cash apps or whatnot. Okay, you already settled all of the percentages. Okay, and then you plan accordingly. How are you going to get exposure to all of these assets? So starting fresh, right, means you have 0% in US assets, 0% in gold, 0% in Bitcoin. But you've already set your targets. You want 20% US, 10% in Bitcoin, 5% in gold, and now your entire portfolio, let's say, is about 50,000 ringgit. Then it makes sense to get your exposure above zero. Why do I keep putting this slide here tonight? It's because it makes a lot of sense what Han is trying to say. Get your exposure above zero, right? Don't have to fill in your entire 20% for the US market. You just fill in maybe 2, 3, 4, 5%, right? At least get a bit of exposure first and see where the market goes from there. A lot of people, when they try to invest in an asset, right, they want to buy here, okay? And then they want to try and sell here. Then they keep telling themselves, oh, right now, but when it's at here, right, a lot of people say it will go lower, right? So you keep trying to time the market. But when it comes to this strategy, underexposed or overexposed, it is no longer about timing the market. It is about, oh, what does my portfolio need right now? And moving forward, I kind of adjust it as the market moves. Yeah, if I'm overexposed, I just rebalance it to whichever asset that is underexposed. Okay. So yeah, hopefully it gives you a good idea on what this strategy is. Hi, gold ETFs in Versa Gold and Bursa Dina. So currently, I'm investing in gold through Versa Gold. It is definitely not the most, it's definitely not the option with the lowest fees, but it's due to convenience because I'm a regular user of Versa and I don't want to manage too many investment apps. Why not I just invest in gold through Versa Gold, right? And this one, the fee is actually quite low, 0.3% management fee, 0.03% trustee fee. There is no upfront sales charges, right? And the investment is 100 ringgit minimum. So yeah, you can check it out and you can see whether you want to invest in it. So okay, last question, okay, before I end the session. How often do you rebalance your investment? Okay, so when it comes to this, right, there are several strategies. Strategy number one, because I update my portfolio every week, which patrons can see over here. Again, if you're a Gather member, you can see my updates over here, right? Just showing you guys, but I'm not supposed to, okay? So yeah, I update them every week, and I have a certain amount of leeway that I give to each particular asset. Okay, so let's say Bitcoin, I plan to invest 10%, but I don't start rebalancing until it exceeds 15% of my portfolio. So there's a bit of leeway, like at least have Bitcoin to rally a bit, then only I start to rebalance, take some profits. So you can use that sort of strategy. Or the other strategy is you don't have the time to look at your portfolio every week, right? Then you look at it quarterly. Okay, or if you're scared, you become emotional, you're scared every day you open the Binance app or TradingView or whatnot to take a look at the charts, then you adopt the strategy of rebalancing your portfolio every quarter. So every 4 months, you tell yourself, I'm going to sit down for 1 or 2 hours and then take a look at my entire portfolio right now. It's definitely going to be out of balance and see which area needs attention. Okay, so yeah, hopefully that gives you a better idea. Shout out to all our Gatherer members, CH, Andrew, Wendy, Alex, CC, Urshad, Caveman, Tommy, Jinkang, Adrian, JS Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, Jinden, Adam, Ashley, Sean, Jason, Putra, Alvin, Jia Chen, Aldrin, Chaiwei, Fahmi, as well as all of our learner members. Thanks so much for joining. Bye. Good night.